in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving Iron.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by TractorZoom, delivering insights. If you're looking for a great place to find and track auction data and see what's going on out there and see how the trend lines are starting to line up for 2021, check out TractorZoom's Iron Comps. Best place in the world to get that information at the tip of your fingertips. If you decide to go that route, use Moving Iron at checkout and get yourself a nice little discount. Chip is with Blue Reef Agri-Marketing out of Morton, Illinois. And Chip, looks like the elevator goes both ways on this soybean trade.
It does. What's that old saying? We take the escalator up and the elevator down, and we certainly stepped on the elevator a couple days ago. And we had, previous podcasts we talked about this, that this market was historically getting pretty stretched to the upside, and every time we'd ever been up at this level or higher in beans in history, you eventually see an increase in massive volatility. We're seeing that. We're about, less than 4 trading sessions, about roughly 80 cents off the highs in, old crop bean contracts here. And corn, it's in the mix there as well. Maybe not quite as deep a break, but surely about 35 cents off the highs here, about 4 trading sessions in corn. So, shaking people up a little bit, making people wake up and say, markets don't always go just one way straight up. And, no real reason. Now, that's the crazy thing. People are like, what's the reason? Why are we breaking? There's no apparent reason for this. It's just, there's some corrections happening here. First year, the dollar's had a little bit of a bounce and a rally. The interest rates are up just a little bit from the first of the year. I think it's just some profit taking. It's plain and simple. A little better. You can put the excuse on a little better forecast and some better rain that's been seen in Argentina. Kind of a mixed bag in Brazil, but it's certainly not been a 180-degree pattern shift down there and raining everywhere. So it's a little bit of a head scratcher to a lot of people, but it's just what's typical in a market that goes as straight up as we've been going. Eventually, you're going to see a correction. That small speculator category on the Commitment of Traders report was an all-time record long in corn here as of this past Friday. And on the high side, not a record long, but a high side, length in the bean market. And you just got too many people, leaning one way on the boat. And we're going to put a little bit of a correction in and see, shake things up a little bit and see where the dust settles here in a few days.
Yep. Yeah, so it's there's going to be a lot of volatility. Just like you talked about this, it's one of those things where when stuff rockets up, it's going to come back down sooner or later, at least to just a checkpoint before it goes back up. You know what I mean? So there's plenty of opportunity for volatility in here, both ways, up and down. And obviously, weather patterns are going to play a big part of that. And the weather patterns, as you look across, the Black Sea regions and those kind of things, there's not the drought situation there is not letting up anytime soon. So it looks like Russia finally did come out and say that there's going to be a smaller grain crop than expected this year, and looks like those export tax are actually going to be something they're going to do. So as you take a look at that situation in the Black Sea and how that's going to affect the overall wheat crop here in the U.S. and in the wheat marketplace, what are your thoughts there on wheat right now?
Yeah, I recently here the wheat market had been kind of leading us higher based off of what you're talking about there, export tax, on Russian wheat that's coming up here in February. Dry weather, that pattern hasn't changed, and so certainly a lot of support in the wheat market, and it had been leading us higher, but it's caught up in this sell-off too. So I think eventually that's going to be something that the market that will support the wheat market. But, where does that support come in? You could, correct things more than anticipated here. The problem with the wheat situation is, as far as the weather goes, is, that crop in the Northern Hemisphere, both, Europe, Russia, Ukraine, and the United States, is in dormancy right now. Many areas are dry in the northern hemisphere, but it's too early to talk that up or to have it really affect the market yet. You got to get into, kind of April, May timeframe and see how much more moisture we're going to get and how that crop came out of dormancy. And so that bullish piece specifically, that's out ahead. The market really, it's concerned about it, but it's not something that's front and center right now. And so that's something that's going to be supportive out in front of us, weeks and months. And in the meantime, the wheat market, being the wheat market, it's got a mentality and a personality all of its own, and it's pretty fickle and very choppy as it is. And you get some of this volatility seen in the corn and the wheat and the bean market, and wheat's going to chop some people up too. And I think that's probably what we're in the middle of. I think you hit the nail on the head earlier. I mean, no market goes straight up. This one seems like it's gone straight up, especially in the case of beans. But eventually there is that correction, and you need that two-sided trade. It's healthy for the market, but unless you have a plan, we talk about having a plan all the time. What do I do now, right? Like I wish if I have old crop corn, beans, or wheat left, and we just broke a large amount off the highs. What do I do now? I wish I sold it now. Is that the top? Or are we going to go lower? You get this whole, mental, psychological game that's thrown in there as well. And it just makes it that much tougher to make decisions.
Yep. So China has come to the table quite a bit here. So there's a report out in Pro Farmer this morning that says Chinese soybeans import top 100 million metric tons in 2020, setting a brand new record. So obviously, their growing conditions were atrocious. I mean, they had record epic floods and all kinds of good stuff. They're shaping up to have another, kind of a longer, wetter winter type of deal like we saw more in 2019 in our weather patterns, having something set up similar to that. The U.S. dollar, with its weakening strength, is opening up the door to a lot more exports, kind of like you mentioned earlier just a little bit ago. I guess as you take a look at exports, where the dollar's at, some of the difficulties that we're seeing in South America, do you see the Chinese buying more crop from the U.S. based on maybe, obviously they get through harvest and everything down in South America yet, but what's your thoughts there? I mean, do you see the Chinese coming to buy more U.S. agricultural products?
Yeah, I think for the time being, and they've been there,
Yeah.
Maybe not to the extent that they were a couple months ago, but yeah, they've been in there within the past few trading sessions for some U.S. beans. They're definitely there, and I think as you dissect this thing, and we get a couple years down the road, I think what we'll probably come to the conclusion of is, yes, there was a trade agreement in the middle of this, but at the heart of it, I think what happened was a poor crop for China. And it just so happened to be smack dab in the middle of this trade agreement. And, they had committed to buying all these agricultural products, and it really benefited them because they needed it. And so, will they continue that? I think it's going to depend on, A, the ultimate size of the South American crop, how much they have to export to the world market, and B, how the Chinese crop bounces back, during the Northern Hemisphere spring and summer, and what kind of weather they have.
Right.
And certainly their demand is massive, almost unquantifiable. They're, increasing everything. We've seen the pictures of these massive pork production facilities that are multiple stories high, and, 6 or 8 of these buildings in a small area. And so they're ramping up, and there's a definite need. Will they continue to buy at the pace that they have? I think that's an unknown. I think it depends on other, world suppliers' crop sizes, including their own. They don't want longer term to, have to rely on the rest of the world. So
right.
Believe me, they're doing all they can to increase their yields and stimulate production and try to be as self-sufficient as possible. And I think in the end result, I'm a little fearful going forward that it's going to continue at this pace that they've been on the last 6 months. But I think that's going to be highly dependent upon their crop size. They bounce back with a big domestic crop this coming year, and I think they back off a little bit And then, to that same point, there's still these estimates out of Brazil and Argentina that are a little bit higher than what I had expected, given some of their dry weather. So, that is still a potential that Brazil still raises around 130 million metric ton bean crop. Even if it drops to 128 million tons, that's still by far a record crop. Some of that is based on increasing acreage down there, 3.5-4% increase in acres. But there's some areas that have been getting some decent rains, and it's not a disaster everywhere. And that crop's still going to be big. And I think, eventually maybe the market's starting to wake up to that a little bit now. No matter what size that crop is, each day it ticks off the calendar, we're one day closer. That thing's going to be hitting the world marketplace here a very short order here. Within a matter of 3 or 4 weeks, we're probably going to have increasing supplies of beans out of Brazil. And then you get into March, and it's going to be, full-blown harvest down there for them, no matter what their crop size. And whatever they have, they're going to put out on the world market, and China's going to swallow it up and likely shift some of that demand down south from here.
Yeah, that's the one thing about that is there's this is a crop, that crop year where that's what they do with it. That's what they're wanting to do with it. They're wanting to export it. That's how they roll with it. Now you look at some of the situation with they've gotten some rain down there in some key areas that they're talking about. Now we're starting to look at, not that far away from going into their corn planting season, just like ours. Have you seen any projections out there anywhere where they've talked about number of acres being planted in Brazil as far as projected acres go as far as corn?
Well, I haven't, and I think that's another key to the market going forward too, is the Brazil corn crop size, right? So about 2/3 of their total corn crop is their second crop that's planted in February. And, they're going to do all they can given the price level that it's very, very profitable, has been for 3 years, but continues to be very profitable to the Brazilian farmer to plant all the acres they can and produce the largest crops possible. So that's going to be a key to this corn crop going forward too, is do they start getting some better rain? Can they get the beans out timely so that they can plant that second crop on time? And then can they get some moisture for that second corn crop? It's 2/3 of their total corn crop. The bulk that's exported. And so that's going to be a key ingredient to how much, does China buy more U.S. corn and kind of the world balance sheet situation. And that's yet to be seen because that crop's still in the bag and waiting to be planted here in a few weeks.
Yep. All right, let's talk about cattle market here for a little bit. Cattle market has been kind of bouncing around, but they've had a couple of days of a pretty good run here. So talk about what you see happening there.
Yeah, we've got this April contract just knocking on the door of new highs here. About 119.5. The deferred live cattle have been perking up a little bit as well because of these higher feed costs. And so, I think we've got through a lot of disappointing cash trade the last, 4 or 5 weeks in here without a whole lot of damage on the front end cattle chart and cattle market. So surprisingly, we didn't have a bigger washout. Maybe that's because of the deferreds being held up because of, higher feed costs. But finally, if we can hopefully, and I think box beef is stabilized and maybe put, kind of a bottom in here for the near time. It's bounced back a little bit. And so there's still strong packer margins out there. I think that the market looks good. Obviously, the feeder cattle market's liking, the little correction we're seeing in the corn market in here. Front month feeders have had a nice bounce off the lows, based on, this correction we're in the middle of in corn. So I think things are looking good for cattle. I don't think going to 140. I think you could, certainly take the April up into the, 122, 123 range and put these deferred contracts, maybe in the upper 120s eventually, maybe knock on the door of 130. But, I think so far, breathing a sigh of relief, we dodged a little bit of a bullet because of just such weaker cash trade the last 4 weeks in a row, at least, maybe 5. And it didn't do more damage, that it didn't do more damage, I think is a little bit of a moral victory right now. So cattle market looks pretty good. The hog market just, can't turn the corner yet and acting a little bit sloppy, well off the highs. and just, too big of numbers, and the weights still are pretty big. So, talk about efficiencies. We're putting the U.S. pork producers putting a lot of tonnage on the market, and that's really kind of holding the nearbys back. But like the cattle, these deferred hogs have because of higher corn prices, higher meal prices, they've acted a little bit better. But even the deferreds have put a little bit of a nasty correction in here the last couple of days. So might just, again, hog market, like the wheat market, kind of has its own mentality here and can be a little bit vicious at times. And right now it's not acting. It's acting like a little 2-year-old. It doesn't want to cooperate, and it's taking its blanket and going home for the time being. We're seeing a little bit of a correction.
Yep. So Joe Biden gets inaugurated today as the new president of the United States. He's got a kind of a laundry list of things. He's got executive orders pinned to that will change a lot of the stuff that Trump has done as far as climate accords and those kind of things. One of the biggest ones that I have been watching and paying attention to is he's talked about revoking the permits for the Keystone XL pipeline. What effect do you think that's going to have on the oil market moving forward? Any thoughts on that?
Yeah, I mean, that's one market, crude oil, that's still up near the highs. And, all these other major financial markets, the dollar index had a huge break the last half of 2020. Interest rates, huge break, down near zero. And they've started putting a little bit of a corrective move in here from their main trends. Crude oil hasn't, probably partially because of, this Keystone pipeline, partially because I think there's a little uncertainty that he's talking out of both sides of his mouth, or has talked out of both sides of his mouth. Imagine that, a politician in Washington talking out of both sides of their mouth, Casey. But
that's weird.
On one hand, he says, no, we're not going to ban fracking. On the other hand, he's on record and in video saying, absolutely, we're going to ban fracking. Probably that, more than anything, is going to have the biggest effect on crude oil prices, at least domestically, is, the policy towards fracking. And, I think spilling back over to the conversation on corn, I read a story yesterday also that the EPA has already, granted some additional exemptions from the, renewable fuels issue. So, even during Trump's 4 years, the EPA was pretty antagonistic towards ethanol particularly, and that's going to be an issue. So this whole energy policy thing is a real wild card, definitely going to affect the energy markets, crude oil, but it's also going to spill over and potentially greatly affect our corn market and maybe our bean market too from a biodiesel standpoint. That's a big wild card, a big unknown that really could have significant effects on agriculture. And I think everybody's kind of, holding their breath a little bit on what we're going to see this first 90 days of this new administration.
Yeah. Well, a lot of different changes coming, however you want to look at it. I mean, there's the whole House and Senate that is kind of shifting around a little bit, and midterm elections aren't that far away, so it's about as bad as when they're running for president. So you'll be enamored with every thing that could possibly come up. So Chip, good stuff there.
Just when we thought it was over.
Yeah, no kidding, right? No kidding. So yeah, March will be we'll start seeing all the reasons why we should do this, that, and the other thing. So it'll be good times.
Let the programming begin.
Exactly. Yep. Good stuff, Chip. People want to reach out to you and get more information about Blue Reef Agri-Marketing or help with their marketing plan. What's the best way to do it?
Yeah, the best way, just give us a call at our office. It's 309-550-7213. Love to chat with you. Lots going on in the market. So it's definitely an interesting, challenging, exciting time in our grain and livestock markets here.
Yeah, no doubt about that. So I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you'll find the latest editions of the Moving Iron Podcast. Also check out MovingIronLLC.com. That's where you'll find all the information about the Moving Iron Podcast. And if you want to see what Chip looks like and get a little more background on him, check out the podcast markets page there, and you'll see Chip there, and a lot of good stuff there. So also check out the special events page I have up there. A good friend of mine, Bill Albaugh, is going to be part of a farm equipment magazine. webinar based around a company called Heavyworth, and Heavyworth is they develop an app to help evaluate equipment. So check that out. Need more information on that? Check out the Moving Iron LLC special events page. So with that, I am Casey Seymour with Chip Nellinger. Let's go with some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving